Hey guys, how are you?
Good.
Good.
How
How
are
you
you?
doing? How are you?
I'm doing well. I appreciate all three of you guys' time. And for those of you guys who don't know you or a little bit about your story, why don't you tell us a little bit about yourselves?
Yeah, my name is Kenneth Donis. I'm a multifamily investor and I'm 23 years old.
Yeah, my name's Jeffrey Don, and we invest in real estate, and I'm 19 years old.
20.
Sorry, 20.
My name's Kerwin.
Just turned 20.
We just turned 20. My name's Kerwin. I'm also Jeffery's twin brother. I'm 20 years old and I am a multifamily investor.
Nice. I like how you guys are all like younger and getting ready to start in the multifamily game. I know you started in wholesaling, and we'll get into that and how you guys transitioned. But one of the main stigmas that we have, at least in our generation, it feels like, is don't do business with family and how that could potentially blow up. But you guys are twins and obviously brothers, and you're really young. How are you guys figuring out that roadblocks? And is it just a myth, or how many struggles have you had to do with dealing with your older brother?
Yeah, I would say it maybe isn't. I think it's like there's logic behind that, right? Because if something goes bad, then you don't want to have it go bad with your family. But in my opinion, we grew up together. We're very close. So there's no one I trust more. There's no one that works harder than my brothers. There's no one that I'd rather be working with. And we've been able to prove that throughout the past few years that we've been working together.
Yeah, and I would also say that regardless of who you're working with, what really matters is, like my brother said, you can trust them, they'll work hard. And I think that's why we work very well together, because it's been very easy. Some family members may not have the best relationship, but we put our business first and we have the same why as to why we're doing it and what we want to accomplish. So that also helps.
Yeah, and I'll just add, a lot of times siblings like just don't get along in general.
Yeah.
So that's a good indicator if you shouldn't work with them. But like we get along and like we're actually friends. That helps. And also we have that alignment of core values. I don't know if Kenneth mentioned that, but having the same core values and like they said, the same mission, I think that unites us. And honestly, real estate is what brought us closer than anything before. Before we got into real estate, we were all at our own respective colleges and we were friends. Like we would hang out and talk every once in a while, but real estate was a great reason for us to just hang out. And now like these are the only two people I see on a day to day besides my mom.
That's awesome. So tell us a little bit about you guys' why and your mission statements at the Donis Group.
Yeah, can you go first?
Yeah, we're pretty much, our why is to retire our mom. And then after achieving that, we want to just have an impact and inspire people to chase their dreams, as well as we have a lot of philanthropic ideas or interests that we would like to achieve. Our number one why for us at the moment is to retire our mom. She's a single mother, immigrant background. So yeah, she's worked very hard and now it's time to do our part.
Yeah, and in regards to our Donis investment group, we're really just helping other people really improve their financial situations through real estate. We definitely think that real estate's a very powerful vehicle and it's a really good way to build wealth. So
yeah, and to add to that, we also have family from Guatemala. That's where my mom's born. They live in like great country, beautiful. They're very humble and they're happy with everything they have, but they live in impoverished conditions and just not the same quality of life that we have here. So our dream is to go back to Guatemala and also provide more access to resources and just infrastructure there. So yeah, we definitely want to help other people, not just here.
Yeah, it sounds like being from a single mother and working through that immigrant mindset. Everybody talks about that a lot. And my parents are also immigrants, so I'm first generation American, and it's different. You guys know how it feels when you're trying to make it to help people back home or just to see this is a land of opportunity. So how has that shaped your guys' mentality from an early childhood, do you think?
Yeah, the immigrant background for sure. First off, my mom was always pushing to go traditional education, that route. And that was what we thought. We for a long time, we thought that success was getting a 9-to-5 job, going to a great college, getting a 9-to-5 job, getting a high paying job. I remember always wanting to make money, always wanting to be successful. And I would literally look up what is the highest paying job. Like that was the context I thought in. And then once I read Rich Dad Poor Dad, that kind of changed it. And I don't know if my brothers have anything to add.
yeah, it's just exactly what he said. Pretty much the exact opposite of what everyone else thinks is being an entrepreneur, taking big risks. My mom is very big on us going to school, getting our degrees. And that was her dream. But in reality, I think once we started reading the right books, listening to the right podcasts, we start realizing that, okay, this didn't work out for a lot of people the way that I think it would work out for me. So we started changing the way we thought, not only, but the type of content that we were taking in, who we were hanging out with and stuff like that started changing. And we started realizing that there was a different path that we could possibly go on. And that's how we ended up here.
Yeah. And sorry, I don't know, can you? No. Quickly, you mentioned the immigrant background. I think also just coming from another country, being first generation, I think there's less pressure on us because we're like literally the first generation of our family that's here. So I like to say we have a blank book we get to write. And also I think it just gives us that multicultural perspective of like, other countries, and a lot of my friends and my peers, they come from like affluent middle class backgrounds. They don't know what it's like to struggle. And so when we went to Guatemala, we got to see that firsthand. And I think that just ripped me out of that American mindset. And I can think in the context of like different countries. And I know that my lifestyle here isn't the same way that other people live their lives in other countries. And I think that was a really humbling experience and really was like the catalyst for our journey, and showed us that we can't waste time, and any like time we're waiting on starting our business is honestly like it's a privilege. And
Yeah. So did that mindset, you talk about reading Rich Dad Poor Dad, and you guys are obviously in the age range when people go to college. Did that lead you guys to leave college and just to pursue this real estate full time?
Yes. All of us, yeah.
Yes.
yeah, so
Perfect.
they were the first two. I don't know if they wanted to dive into what.
Yeah, I was a freshman at my university in 2020. I finished my first year and then got into real estate halfway through that first year, eventually closed on our first deal 6 months after that summer. So it was around the time where I was supposed to be reapplying for school that I ended up just closing. We closed on our first deal. We made some money. So we were like, this is possible. I like doing this better. Building a business was a lot more fun, a lot more fulfilling. And it just made more sense. And honestly, I didn't think going back to school made sense for me personally.
Yeah, I mean, I was also in school studying to be a physician assistant. And so my same time came around and we were supposed to sign up for classes. And I just remember in one of my classes in the last semester that I was there, one of my teachers, I had unfortunately turned in an assignment late. And because my teacher knew I would always speak about it in class, she knew that I was building a business and working on real estate. And she was actually an agent herself. So she understood the hustle and grind that it took or takes to become successful in real estate. And so she pulled me aside in one of my classes, and she basically said, hey, like, I know that you're doing the business and I know that it takes a lot of time and it seems like you're very passionate about it. So let me ask you this, why are you here? And she asked me, why are you here? This was the first time a college professor had asked me, why are you here? As if it was not necessarily an option, which has opened up my eyes and just made me realize something that I was like subconsciously already knew. And I didn't know the answer to her question. So it just got me thinking. And ever since that day, I just made the decision to leave and chase what I wanted to do. And here we are.
Yeah. And I dropped out like a year after they did. I was still in college. So I dropped out when I was a rising junior. And I would say for me, like the main two things was that we were firm believers that you're the sum of the 5 people you surround yourself with. We spent like almost, I think, a year and a half at that point that I dropped out. We spent that just surrounding with each other. We also consider the podcasts you listen to and the authors you read. Those are people in your circle. Even if you're not physically with them, like you're consuming their content and always surrounding yourself with them. And I just thought, I don't want to be in class with people that aren't on the same path as I am. And those people, my peers and my students and my professors, who a lot of times they can't really teach me what I want to learn in terms of real estate. So I would be surrounded by people that like I just don't want to trade places with, and I don't know if I could take their advice. So that's why I really wanted to protect my energy. And yeah, I think I'm a big believer in real teachers. So even though we're not in traditional schooling, we still learn. I have a podcast and we interview some of the best investors in our industry. Jeffrey's always networking. Kenneth is always underwriting deals. And so we're still learning. It's just not in the traditional sense.
Yeah,
Go ahead.
Yeah, we've joined different mastermind groups as well, and that kind of opens our network to a lot of awesome people that are doing awesome things within real estate, specifically multifamily. But a lot of these people come from, they went the traditional route, they went to college, they got their degrees, they got really high paying jobs in corporate America, and they ended up in multifamily real estate. So we feel like, or we think that it's something that we found our place, and it's not something that we're not happy about. We're definitely enjoying it.
Yeah, that's awesome. And I took a different route. I took the traditional route, got the degree, went to a high paying corporate job, and still found that it wasn't for me eventually through podcasts and books, and it opened your eyes. So either way, it doesn't really matter. But the point that you mentioned, Kerwin, is really important. That's because you're not in traditional schooling. Your learning doesn't stop at 22 or whenever you leave college or high school. You have to continue to learn every single day. And whether it be books, podcasts, masterminds, courses, anything, just continue to challenge your mind and grow every day. So I'm glad you guys are doing that. And now that you started, you mentioned multifamily a lot, but that wasn't your first deal. So talk to us a little bit about how you decided wholesaling. And first off, what is wholesaling for those who don't know?
Yeah, so I'll quickly define wholesaling is getting a property, or wholesaling anything is when you buy something, I would say below market value, and then you wholesale it or sell it or assign it to someone else who is going to be the actual buyer. So in real estate, it just works. You get a property under contract with an assignment of contract, and you have equitable interest in it, which just means that you have the interest to buy the property. and then you assign that to someone else. And that could be a fix and flipper. It could be just some person that's looking to buy it themselves. And typically these properties are distressed, which is why the sellers are willing to sell it at a wholesale price. So that's what wholesaling is in like very general definition way. But Kenneth can go into how we got our first deal.
Yeah, how we got into wholesaling or figured real estate in general. I was in college, and this was in 2018 spring, and I was watching The Breakfast Club, and a guy, his name was Mark Wynn, he came on, and I don't know if you know what The Breakfast Club is, but it's like a hip hop radio show, and they just bring on a very well-known hip hop artist. But this guy in particular was a real estate investor, and he started speaking about how he came from the hood, no cash, no credit, and he built a multi-million-dollar wholesaling company. And that was what caught my interest. And he said it many times in that video, if you're watching this, you could do it as well. And that is what caught my attention, because I believed then that if he did it, then I can do it. And if I can do it, anyone can do it. Yeah, that's how we got into it, and it caught our attention. And after that, we just started learning about it more.
Yeah, if you can tell you the journey as to how we got our first deal.
Yeah, that's exactly what I was going to ask next.
Okay. So yeah, so after that, he really was the first one to find what it was. And he kept telling us, learn about it, listen to these podcasts. There's different people that were having really good content on Spotify, specifically via podcast. So there's a guy named Max Maxwell, Bigger Pockets is a big one. All those podcasts we just started consuming. And at the time we were all at different schools, like Kerwin said. So whether I was working out or I was skateboarding to my class or anything like that, I would be listening to something. And I kept hearing it, but people getting their first deal. And I was like, okay, we can do this too. So then we were like, what's the next step? He learned how to start the process of finding because we were doing direct to seller marketing. So you'd have to pull a list of data and then you'd start cold calling it. And that's really what we did for eight months straight. We were just cold calling all day. But in the beginning, we were at school. So we were only doing it for a few hours when we had time. Eventually, we got sent home because of the COVID-19 pandemic. We weren't allowed to stay in our dorms. And in our opinions, we saw that as a blessing because we were able to have a reason to just stay inside all day and work and be surrounded by each other. So we were all just grinding every single day, cold calling. Eventually, there was this one lady that lived in our city. She had a property that we had given her an offer where we needed it to be, and she wasn't going to be able to, or it wasn't going to work for her at that time that we made her the offer. But me and Kenneth were driving back from another appointment a few weeks later, and she called us back and said that she was ready to move forward with the price that we offered her. And that was the first deal that we ended up closing. And we actually closed 2 on that day. So during that time period, we had another one lined up. It took us about 6 months to get our first deal. I mean, it was really awesome. It was obviously a lot of hard work. There was we took out like $7,000 of credit debt. It was a lot of like faith. My mom kept getting mad because we had to go to her to take out money because she was like in control of our bank accounts. So she was like, this is the last time. We took out like the last time we ever took out money. And that was like a week later, we closed on our first deal and made like 30x of what we took out of the bank. So she, after that, didn't really question us much. And at this point, I would hope she would say that it was worth it.
Yeah. So you mentioned 6 months, 7,000 in debt, and cold calling. 3 things that everybody kind of hates. Nobody wants a long time frame for success. Nobody likes cold calling or selling in general. What kept you guys motivated or really disciplined enough to continue the cold calling with, I don't know, maybe thousands of rejections, tens of thousands of rejections?
I'll start. I'll say, for one, we consumed a lot of good content, and we knew that it was possible because of all the podcasts we were listening to. Like, we knew so many people were doing it, and so we knew it was possible for us. I mean, also, like my brothers mentioned, at one point we were $7,000 in debt, and I remember having like conversations like, "There's literally no turning back. We burned the bridges. We have to make this money back. We don't have any other option." So we just had to keep going. We knew we had faith, and there was a point where we used a 3-line dialer to run through our data, and that was pretty much like, that means that you can call 3 people at 3 numbers at once. And there was a point where we couldn't afford that anymore. So we were like the night before we got our first deal, we were going to have to cut that subscription. It's like $100 a month. We couldn't afford it. So we're going to cut it and start hand dialing. And we typically called from 9 a.m. to 8 p.m. every single day, during lunch, during bathroom breaks, like a lot. So we would never stop. So you can imagine us hand dialing. But I would say also, I would be low on morale sometimes. And I'd go to them if I was like my mom, one day I asked her for $500. It was the last time. And she said, "This is the last time I'm giving you guys money. You guys are wasting your time. It's not working." And I went to Kenneth and I was like, "Are we doing the right thing?" And Kenneth was just like, "Yeah, man, just gotta have faith." And so we would just give each other hype speeches, I would say.
Yeah, he pretty much nailed it on that.
So
I would really say, though, I mean, believing in yourself, first off, I truly believe that thoughts, if you could think it, you can make it into reality. And with that being said, I believe that. I've always believed that in my life. But with that being said, I saw other people doing it. Like, I know that I'm no better than anyone, but I can be just as good as anyone else. So just seeing many other people getting their first deal, building multi-million-dollar businesses, I'm no different. If I work just as hard or as hard as I possibly can, like eventually it'll happen, which is the mindset we had. And yeah, we just kept on going.
Now, coming out of that, obviously you guys don't cold call anymore. You've been able to get out of the wholesale business and into multifamily. But what has that kind of the confidence given you that you've been able to deal with the rejection and the long cycle of wholesaling?
Yeah, I would say, to be quite honest, I personally was always a pretty confident person. So I just enjoy conversations with people, and either friends or just random people that I would meet. I would say at least a pretty good person just to spark up a whole conversation and learn about somebody's life in the like 10 minutes that I know them. But I will definitely say that wholesaling built a different kind of confidence in me that you won't know until you call random people asking them if they would like to sell their house, and then they either threaten you. Some people, say no or just yell at you, curse at you. Some people would be very angry. That built definitely a different kind of confidence in me, at least.
Yeah, and I would also say, in regards to like the cold calling aspect, yeah, you learn like how to take rejection, because obviously you're getting rejected 99% of the time. You learn the power of consistency, and that's kind of when you close your first deal, you'll realize, yeah, you're working really hard just for that one yes. That's what it takes. But also just being able to understand that, I kind of lost what I was going to say, to be honest. But
Yeah, I'll add. I would say I was going to say both of those points, but also learning to be comfortable being uncomfortable. I think that's like something we're like literally we dedicate ourselves to that. We have habits that make us uncomfortable every day, and so I think like just literally it never gets easy. Like I don't think anyone's going to say cold calling is something that they're comfortable doing, but I think they get used to the feeling you get when you do it. And I think we apply that to like taking cold showers or walking up to someone at a networking event. And it's not easy, but you don't let that stop you.
Yeah.
I think that's the mindset that we have and that we've developed.
Yeah, and I remember now. It was delayed gratification. That was the thing that I wanted to reference. So we obviously, growing up with, especially in I would say our age group, a lot of people get instant gratification growing up.
Yep.
That's on their phones, specifically social media, stuff like that. That's the thing that we had ingrained in us, but cold calling literally pulled that away and was like, you're going to have to work for it. That's exactly what we did. It was delayed gratification. And eventually we did get the gratification that we were seeking, but it did take a lot of work. It took a lot of days that we didn't know because we had never done it before. So it's almost like that. The law of the first deal, they say that it's a thing, and it is, because you don't think it's real until you do it yourself. It doesn't feel like it's real. It doesn't feel like you can actually do it. And then you do it, and then you're like, oh, if I can do that, and I didn't know I had no actual real proof that I could do it. You start actually believing that your thoughts become actual matter, and you start proving that to yourself. And then that's exactly what we did in multifamily. We literally thought it and we did it. And that's exactly how I think any success is really created, is just by a thought. Starts with a thought.
I agree. It's always created twice, right? The thought, and then the belief that you could do it, and then the actual thing that it gets done. So it gets created multiple times before you actually see any tangible result. But one more question about wholesaling before we move into multifamily. What is the initial point that you need to do? Is it developing your buyers list, finding a great property? What do you kind of target first that gives you that leg up against your competition?
I would say, in my opinion, it's having that whoever's talking to the seller on the phone, having them be a very good acquisition manager or just salesperson, because there's a lot of different things that you can do, but it starts with that. And then in regards to if you want to stand out, because obviously everyone they can generate leads, but can you actually build good relationships with the person that's looking to sell? So I would say that's the main thing that can help you stand out.
Yeah, I would say pretty much basically what he said, but definitely if someone's just starting, I would say just get on the phone. It's the hardest thing to do, but it's the one that will make you money. Not instant gratification, but it's the one that is, if you get a yes, you will make some money. And so you just have to go through all the no's until that point. Yeah.
Yeah.
And then the buyers will come if you have a good deal. So everyone says that, but it's true.
Fair enough. So why'd you guys decide to switch from wholesaling into multifamily? What drew you into the multifamily game?
Yeah, Kenneth has always been a big fan of Grant Cardone, and we just in general, I mean, we always known that commercial real estate was something we wanted to move into, but we always thought it had to be something we did like after years of experience in real estate. I mean, we had that misconception that you had to start in single family, honestly. And so we were in a mastermind, and this guy named Alvin Hope Johnson was on the call that day, and he mentioned syndication, and that was the first time I had been exposed to what syndication was, and just that multifamily was even an option that people could get into, and he exposed us to it. And we were always interested in commercial, like I said. So I had a meeting with my brothers. It was like a Sunday. We have our meetings on Sunday, and I had it just been eating away at me. I had previously talked to my mentor, one of my mentors, and I'd asked him, hey, we want to get into syndication. Should we wait and keep scaling this wholesaling business? Because we were actually getting traction. We were starting to close a lot of deals. So I didn't want to walk away from something and get that shiny object syndrome. And he said, Kerwin, what are your long-term goals and what's the straight path to get there? And we knew that we got into real estate for passive income, just passive income and retiring our mom as soon as possible. We really recognized that real estate, multifamily in particular, was going to get us there the fastest. And I was honestly getting tired of single family anyway. So I talked to my brothers, and we identified that fear was the only reason and the only thing holding us back from starting that multifamily journey. And that's why we just dropped everything in single family and started to dive into multifamily.
Okay. And when you talk about syndication, for those who don't know, explain what that is and how that differs from creative financing or different versions of creating financing as well.
Yeah, creative financing, first we can just briefly define that, is when, personally in my experience, what I do is I have the seller be the bank, and in regards, if they own it free and clear, we call it owner financing. So they're just going to hold the debt or hold the note, and then we'll make payments towards the purchase price as if we were making payments to a bank. They're going to be the bank in that scenario. Another option of creative financing, I would say, is subject to, which is when you don't assume the debt on the property or the mortgage, but you just make the payments on behalf of the seller. And then syndication is when you raise or pull together a group of investors' money, and that is what you use to raise equity, is what we call it, and then we'll purchase a property after securing commercial real estate financing. So that's typically, you do go through a lender, but in regards to the equity that you need to close, that's a lot of different things that go into that equity pool, but you raise that from our investors. So that's the difference, I would say. In creative financing, you're having the seller be the bank, and in syndication, you're raising capital from private investors.
Yeah, and these are all like different tools in your tool belt. Like I've heard of in multifamily, you can get owner financing to cover some of the equity. And also, so bank will only finance, I think, like 70% of the total purchase price. And then you have to come up with the remaining 30%. And so a lot of times people will raise that from passive investors, or they'll ask the seller to carry it in terms of the seller financing. So just you can get creative with it.
Yeah. The amount that the bank can cover depends on the deal.
Yeah.
That's sometimes can be 70%. They can go up to 80%. Sometimes it can even go to 85%. It really just depends on the bank, the deal, and a lot of other factors.
Yeah, and most of the time, it depends on what size you do as well, because most of the time, if you're doing larger deals, it's not going to be a bank. It's more agency debt or like a bridge loan. So it really just depends on the size. Some bridge loans or Fannie Freddie, they may do up to 80% LTV or LTC, depending if you're going in bridge or just agency debt. But if it is a smaller deal, like under $1 million or 2 million, then you would likely get a bank, and banks, I'd say probably 75%. You could potentially get 80%, but yeah. So it really just depends, but yeah.
Yeah, and LTC and LTV, to define those, is loan to cost and loan to value ratios.
Okay. And is that it? What is your metrics to assess the property value? I know, Kenneth, I think you're the one who actually does the property walkthroughs, or at least maybe you used to. So talk to us a little bit about how you look through a property and assess either cash on cash or cash to door policy. What do you look for? And does that differ from when you were doing single family to multifamily?
Yeah, it is very different. Multifamily is actually assessed based on comparable properties, meaning single family. So if a property, if I own a house on this street and the property right next to me on the same street sold for 100,000, all fixed up, someone pretty much just fixed it up, whatever, made it really nice, that means that more than likely my property will be worth 100,000.
The same renovation.
The same renovations.
Right.
But in multifamily is a business. And most people don't actually realize that each apartment complex is its own business, and businesses are evaluated on how much income it produces after expenses. We call that NOI. Basically, you increased about it's evaluated, like I said, on net operating income, which is just what your total income that multifamily property produces, whether it's rents, pet rent, just other incomes that you can charge, like application fees, things like that, minus the expenses to run the property. And that's management, personnel, like payroll people, just water, sewer, utilities, taxes, just things like that. And whatever is left will be evaluated depending on a cap rate, and that depends on your market. So a cap rate is just if you were to buy the property cash, what percent return would that property, and that depends on the markets. But that's how a multifamily property is evaluated, like a business.
And the difference is a single family, you're comparing it to other properties in the same area. Multifamily, it's not so much what's going on in the area that does play a factor, but it's more so based on the amount of income that it can produce.
Yeah.
Okay. So how do you throw a number on, let's say, first, the multifamily, I think, is defined by anything it's 4 or more houses, right?
Correct.
So go ahead.
Yeah, in regards to it's 5 or more, but in regards to like the debt that you can get, that's really what the bank defines it as. Multifamily just means more than one.
Okay. Fair enough. So when you're talking about like how each unit of the multifamily gets assessed, how do you know how much you can, for example, rent this out for? How do you get to that number or get to an estimate of that number?
Yeah, and that really depends on what other properties. So that's when comparable properties in multifamily come in, because if you have a 70 vintage asset and there's another 70 vintage asset, say 100 units or whatever, that is very nearby, but was bought, say, a year ago, and the current owner has undergone renovations and they're achieving a premium of, say they're achieving rents of 900 and they went from 800 to 900 with changing the floors, like LVP floors, updating cabinetry, countertops, paint throughout the units. That means that you will more than likely be able to achieve a $900 rent. So if your rents are at 750 because your units are classic, meaning that they still look like 70s vintage, you can go in and do the renovations and project that you'll potentially reach $850 to $900 like this comparable property. And that also depends on amenities. If they have a pool, you would more than likely want to have a pool. If they don't, then you might want to project a little bit lower, but that's how you compare and see where your projections as far as rent goes. And we use like a CoStar report, which pretty much just pulls a report of the submarket, and it'll show you all the properties in that area and what they're renting for, when they were bought, how much they were bought for, and just a whole bunch of data on the market.
Nice. So you can use comparables via the CoStar to get what kind of estimated income you'd get, and use the formulas of NOI and cap rate to understand your cost. And then you're looking for what percent margin roughly that would make it, quote unquote, a good deal.
Yeah, we underwrite very conservatively. God forbid something happens to the economy, but we underwrite cap rates decompressing, which means that they would rise. As cap rates rise, that means the evaluation of your property would decrease. So your property would be worth less. So in our underwriting, we actually have a cap rate escalator, and it depends on the type of class asset it is. If it's a B class, we typically do 10 bips. If it's a C class, we do 15 bips, meaning that it'll move that amount 0.10% or not 0.10 of a cap rate of 1% each year for B class, and then 0.15 for C class each year that we hold, and we hold 5 to 6 years. So yeah.
Okay. And how the transition has started for a couple months, right? You guys have been doing the multifamily?
Yeah, so it started in January of this
January.
year.
Okay, so almost a full year. And what have you learned from, obviously, all the different types of analyses that Kenneth broke down is one thing, but what have you learned about yourselves and how you actually can scale the multifamily business?
Yeah, I would say the main thing is the power of networking. We've been able to go to a lot of different events, and we've realized that the biggest return on our investment is going to these events, because we're able to meet people, build on those relationships, and then eventually hopefully do business with a lot of these people. But regardless of that, we are just able to learn so much from them. It's awesome hanging out with, like, at certain real estate events, you just meet amazing people that can share kind of any type of knowledge that they have, if they've been able to gain, because typically they're a lot older than us. So they just have so much to give, and they're willing to pour into us. So it's awesome.
Yeah. So pretty much what he said, what I've personally learned is when people say that your network is your net worth, they are not lying, because you can be pretty much broke, coming from a single whatever background, and just because of the people that you surround yourself with and the knowledge that you will gain from surrounding yourself with them, is you can't even put a price tag on that, honestly.
Yeah, and honestly, like we always have to say that investing in yourself is the most important thing, because you're your greatest asset. And I think in a way you can invest in yourself is just surrounding yourself with the right people. because their habits will rub off on you, their knowledge will rub off on you, their success will rub off on you. And also we've implemented a lot of the systems that Gino Wickman discusses in the book Traction. And that's what we've learned recently, is that just each of us getting in our own lanes and focusing on our own strengths and what we like to do has helped us along a lot of the way. And that's helped us move the needle in different parts of our business. And it's also we have a benefit, but Kenneth underwrites deals, Jeffrey is investor relations, and I'm in charge of marketing, including the podcast. And as you can see, what we do is, for the most part, doesn't really overlap. But we each, in a way, I would like to say, like sometimes we're working in different businesses because it's different things. So I think the power of that and just understanding what you like to do, that's helped us a lot.
Yeah, I like that kind of division of power, division of labor. That way you're not stepping over each other, but at the same time, everybody's working on the overall bigger mission, that bigger why of retiring your mom. And that's awesome. That builds a lot of team camaraderie for sure.
Yeah, thank you.
Yeah.
So what's next for you guys?
Yeah, I would say for this year, we're just looking to continue scaling our multifamily business, increasing the amount of units that we own. For me personally, increasing my investor database. I'm really just looking to meet more people, building new relationships, going to more events, specifically more real estate ones. And yeah, I'm really trying to retire our mom as soon as possible, become financially free ourselves, and help people do that along the journey.
Yeah, and I don't have much to add to that. The podcast is becoming daily. We're going to start releasing daily, and we are changing up the format a little bit, but I'm excited to just bring value to people. And the goal is to lower the barrier to entry for podcasting and for real estate podcasts. I think a lot of times there's like buffer of people that just get bored and turned off by a podcast that doesn't really, it goes over your head if you're just getting into it. So we're trying to make it something that's easier to digest for the newer investor or aspiring investor.
So talking about the podcast, what is your podcast called? And obviously it's released daily, but where can they find it?
Yeah, it's the Real Estate Monopoly podcast, and you can find it on Apple Podcasts, Spotify, and most podcast streaming platforms.
Okay, nice. And so what have you guys taken from inspiration from the podcast, from your guests, or from the real estate conferences that you guys go to, in terms of somebody who wants to get started? Now you talked about lower barrier of entry. There was a lot that was thrown around, and people sometimes get that shiny object syndrome, or they just don't know where to start in general, and they get hands tied up. They don't know what to do, and they do nothing. So how would you break down, what is the first thing that people need to do to get started?
Yeah, I would say, in my opinion, just start reading the right books. That's going to lead you onto the path that I think you're meant to be on. It's really there's power in knowledge, and then once you learn that action is like the main thing that you should focus on, then you'll learn that. But you should learn that through a book, right? Because growing up, no one says action is like the thing that's going to make you successful. They might say it in other words, but typically, and that's not what I was taught in school. It was really just get good grades and study hard. But like, they don't necessarily say, if you actually generalize it a little bit more, in my opinion, you learn all that through the certain books. So we're big on Napoleon Hill, Grant Cardone, Robert Kiyosaki, all these different authors that produce a lot of awesome content. We let them be our teachers, and that's led us to where we are. So I would say the first thing is to start surrounding yourself with the right people, but you can do that first by just reading the right books and listening to the right podcasts.
Yeah, okay. I'll just make it like specific steps. I would say step one is to read Rich Dad Poor Dad by Robert Kiyosaki. That sets a good like foundational mindset. And then the second step I would say is go to eventbrite.com or meetup.com or biggerpockets.com and find a real estate meetup in your area and attend it, network, get out there, start making connections, and then throughout that process, try to identify what your niche is in real estate, because I think you can break into pretty much any sector of real estate. It's just a matter of what you want to do and what is going to align with what your goals are. So yeah, I think picking a niche is important.
Yeah. And to pretty much top it all off, I believe that the first thing you have to do, doesn't matter what you want to do, is believe in yourself and just believe that it's possible. If you've already seen someone else on this planet do it, that means that it is humanly possible, and anything that is humanly possible, any other human can do. That is the first step, just believing that it's possible, and that anyone that does anything, they're just human. Like we're all pretty much the same. So if one person builds a multi-billion-dollar company, that means that literally anybody else could do it. But you just have to study and figure out what they did to do it, and then it kind of replicate itself, or replicate what they did. But after that, of course, like my brother said, taking action is very important. People may believe in themselves, but never take action towards it. Nothing happens if nothing happens, and nothing changes if nothing changes. So if you want to make a change, you got to change.
Yeah, I like that. And you guys are also on Instagram, or what other social media platforms are you guys on? And can they reach out to learn more about you guys' story?
Yeah, we're at Donis Brothers on every platform. That's DONIS Brothers. And our website is www.donisinvestmentgroup.com. And they can also check us out on our podcast as well, The Real Estate Monopoly.
Yeah, we're on TikTok, we're on YouTube, we're on Instagram,
Twitter.
Facebook, Twitter, LinkedIn,
Nice.
everywhere.
All right. I'll definitely have all those links in the show notes, plus obviously the podcast. And I appreciate you guys' time. I learned a lot, especially about the multifamily investing, something that I'm interested in doing eventually once I scale a few other things that I'm working on. But a few years down the line, hopefully I will be a part of you guys' group as a multifamily investor.
Yes,
Awesome,
sir.
yes, sir.
Thanks so much for
Awesome.
having us.
Thank you.
Yeah,
for
it was a
having us.
pleasure.